Today is Wednesday, November the 4th, and I have not made a video in some weeks because frankly I was not in the mood to trade with all the uncertainty going into the election. But now that we've seen the outcome of the election, maybe not decided, but certainly clear, the market is pretty happy with the fact that we're going to have divided government. However, if the Republicans should lose some Senate seats, the market may not be happy with a president, Senate, and House of the same party, and we may see some downside. But anyways, what do the charts tell us? Look at the SPX. Didn't quite need the cloud because it got support today where it opened, which was the 50 simple moving average right there. So that's important. But we've got the Chikou span out in the clear. We had this gap, which was back to September the 28th, which got closed last week, so we can get rid of that. We have no other gaps in our future in the upwards area, so this is certainly bullish for the market going up. The volatility index took a big drop going into the election and today, touching on its 200-day moving average and bouncing up. I'm going to tell you about a stock that I've started to invest in, a Chinese Tesla, in a second. Apple, very important in Apple today. Look at the Chikou span. The stock struggled all day to get above the cloud, and it didn't quite end up above the cloud, but the Chikou span did end up above the body of this candle. So that bodes well for Apple breaking through the cloud because there's not a lot of resistance. I added to my short put position. I now have some November 110 puts that are short and some December 110 puts that I have short. Still playing that one pretty close to the chest. Love to see this big Caterpillar pull back because it's a stock that I would like to own again. Good dividend stock, company that will do very well if we get some infrastructure passed. But that is unlikely if we can't get the Republicans on board with spending money. So that's why, I think that's one of the reasons why Caterpillar dropped today. Now, do you remember this shark pattern that we were following? And I said I didn't really trust shark patterns. You don't see them all that often, but we kept an eye on it. Well, guess what? The shark pattern range possible for the XA move has been met. There's still room for it to go up, but the stock did pull back, found its support on the 50. So Caterpillar, could be an opportunity to nibble in and start buying a little bit of shares back in Caterpillar at 155, because it is has a chance to get back to this 170 and test that for sure. And then, of course, there'll be some sellers there. Home Depot is just a stock that is on fire again after having 2 weeks of pullback. No particular technical reason for why it bounced there. Not a Fibonacci, not a moving average. Let's look at the cloud, and we do see something in the cloud here, not as a reason to bounce, but we can see that it took the path of least resistance to break through this joint between the red and yellow cloud and break through and find resistance today at 138.2%. So Home Depot is bullish again. AT&T, I've been looking at AT&T because I've been adding to it since I've been gone at a 7.7% dividend. I'm liking it every time it drops, and I keep adding 100 or 200 shares. Whirlpool, a little bit of a pullback at its 138.2%. stock that should do well if there's any stimulus money available. We don't follow Amazon all that much. Let's take a look at Facebook. Facebook broke through the cloud, got some support. Let's take a look at the Fibonacci that we've been following for so long, reaching towards 178.6. But the stock that I want to tell you about is NIO, which is a company that produces electric vehicles in China. Huge market for it there, and the Tesla, of course, is very expensive. Drew a set of Fibonacci's for a friend of mine who tipped me off on this, and I started buying it on Monday, bought 300 shares on Monday, 200 shares this morning, and as soon as it hit this 200% Fibonacci, I sold the November 41 calls. I think it's going to have a tough time breaking 40, but it is eventually going up to $47. But I'm hoping that'll take longer than the next 2 weeks, and I'll be able to keep a really nice premium, $3.30 for those calls that expire in 2 weeks and 2 days. This was the price, by the way, where I told my friend that he should buy after it had shot up here and it started to pull back. I said, as soon as it breaks over this high, buy it. He did. I wasn't watching that day, but I did get in around 32.60 after it held this 161.8 right here on Monday. And the Fibonacci represents this wave up, and you can see that it's a pretty good one because the 78.6 was the pullback from this high. We came back up, played around that 100% again. This is a very strong Fibonacci. So let's take out this green line. That's where I said to my friend, as soon as it makes a new high, buy. That 138.2% was breached. 161.8 really didn't provide much resistance. 178.6 did on Monday, or Tuesday rather. And then of course today 200%, and that pullback for this little doji. This is going to be an exciting stock. Look at the volume that has helped to move this stock up. Beautiful. And we've had 2 days today of institutional buying because it's above the moving average. So keep an eye on that. It's not too late to buy. If it comes back tomorrow, I told a friend of mine, watch it on the 5-minute. And if it comes back to this 178.6, that's going to be a lovely opportunity to buy again. But there will be resistance again at 39.79. So if you buy a few hundred shares, sell it at 39.79 because it's going to have difficulty with this previous high. And it is going to break through eventually, but it'll be an opportunity as it chops between these two Fibonacci's to scalp some money. I'm not saying I'm going to be back every day, but I do want to keep you abreast of what's going on with NIO and Apple and SPX, and I just think the market is getting exciting again.